That was a view coming in from Jyotivardhan Jaipuria, a market expert, saying that 2016 can be a year of decent returns for the market. Mayuresh Joshi from Angel Broking is now joining us. Mayuresh, today's day has been about the new listing. Any view on any of the names, Dr. Lal as well as Alchem?
No, clearly, Pankaj, I think stupendous listing for both the players. And again, I think Dr. Lal in particular, I think with the kind of cash it has on his books of 148 odd crores, you're probably looking at a niche business being listed on the exchanges. You're also probably looking at expansion of the geographical presence that Dr. Lal was probably missing out before the IPO came out. So yes, I think all the positives are probably there in the price. But again, I think valuation is a little bit too expensive. Even at the IPO price, we thought that 40-41 times trailing was expensive. So clearly, I think one would ideally wait for declines if it's looking as a fresh investment for Dr. Laz in particular.
Right. There is no point to buy in on a day when it is up 50% and 30% respectively, right? You would wait and watch for a little bit of settlement and then probably buy?
Oh yes, absolutely, Pankaj.
Right. Let's talk about Sun Pharma. So we got the details of the warning letter that came in on Halol facility. There are no data integrity issues, and it has gone back to the pre-warning price that it was there on Friday. You think slightly an overreaction on the upside, or do you think at 780 sufficient negative news is built into Sun Pharma?
So from the peak correction, probably a lot has got factored into the price in terms of what has happened with the Ranbaxy merger, what is happening with Halol, the issues that the OI pointed out, and again the warning letter that has probably come through. So clearly, I think looking at the contents, it doesn't seem that that import ban will probably come through for Sun Pharma. So that does give a respite in terms of an EPS cut that a lot of analysts were hoping if the import ban would have come through of anywhere between 10 to 12% on FY17 numbers. Clearly, I think Halol contributes 9 to 10% of the overall top line for Sun Pharma, and clearly any import ban not coming through is a huge positive. Again, I think the integration issues with Ranbaxy, it's a well-known fact. So again, I think we are talking about the same issues with the market is probably well aware of, and we're probably talking about soft numbers for Sun Pharma to come through. But FY17, our take is with approvals like Gleevec coming through, the EPS would definitely be getting up. So I think 29.5 rupees is what we envisage. So remain extremely positive and optimistic on the stock. I think it becomes a very good long-term investment bet.
Right. If you talk about today's rally, it's been led by the large cap names versus the mid cap names. You think a much deserved rally after the underperformance versus the mid cap space?
So as I've said time and again, I think the mid-cap rally probably has been a little bit too much, and one really needs to be very, very stock specific when it comes to the mid-cap universe. You probably look at valuation, you look at their earnings trajectory, and you look where the stock prices are. I think the earnings or the stock price is way ahead in terms of what the earnings expectations for a lot of mid-caps are. Clearly, even in the large-cap universe, I think across sectors you need to be stock specific as well, because you need to clearly distinguish which sectors probably might do well over the next few quarters, where there can be growth recovery, where the earnings upgrades or the earnings recovery can still be seen rather than any downgrades coming through. So clearly, I think we're having a stock specific approach, and within that sector approach, I think we're looking probably at stocks which are probably reasonably valued at this point of time, though there are very few of them left.
Right. And how should one play this? Should one stick to the tried and tested pharma, IT, consumer names, or probably one should start to look at high beta names as well?
No, clearly, I think if you can take banking within the high beta pack, I think banking is something that we'll still continue to prefer. Our take is that autos should do reasonably better, selective pharma names should do well. Capital goods is still very skeptical about. So I think with the exception of L&T, which again has underperformed and might underperform over the next couple of quarters, especially considering the order guidance cut that it's given, the revenue guidance cut that's given. Our take is that banking and financial services, auto, selective pharma names, selective IT names should still be looked at over a long-term perspective.
Right. How would you look at something like a Reliance Communication? Now, that's a name which is giving you news flow every day. However, the stock price in the last 15-20 days has been stable. But do you think that one should be overweight at 86 on RCOM?
Clearly, I think one must wait and watch, and clearly if you're looking at the asset sale which has happened for RCOM, yes, I think the deleveraging on the balance sheet will start taking place. The merger news that we're probably hearing about and the street hoping if it gets through with regulatory approvals, you're probably looking at the second largest operator. However, I think the core business dynamics, Pankaj, still remain extremely weak, not just for Arcom, for the entire telecom industry as a whole. I think for voice realizations have basically gone down. You're probably looking at data competition coming through from Rel Geo, and even the data revenues probably, even though the percentage probably has gone up for a lot of these telecom operators, the data revenues probably are shrinking, and on a per megabyte basis, it's actually coming down. So clearly, I think competition coming through from Rel Geo on the data front, voice realizations coming down, the voice traffic is going up, ARPU's probably consolidating, the RMS data not standing up to the SMS data. I think all these factors are not indicating that the telecom sector might outperform. So a clear case is that telecom stocks, including Arcom, might largely underperform the industry going forward. And clearly, I think Arcom's outperformance so far has a lot to do with what kind of news flows has got associated with the stock. But we don't believe that the core business dynamics for the entire telecom industry have changed.
Some of the other ADAG names, Reliance Infra, Reliance Capital, anything of those names also that you like?
So clearly, again, I think it's going to be a wait and watch there as well, Pankaj. It's a clear deleveraging story getting played out, asset sales happening, and that is the need of the hour, and it's probably indicating that they are looking at a single line of business, which is defense. So clearly, it's a long drawn-out play that they've probably come out with, and one really needs to understand how this will all pan out going forward. So clearly, it's a wait and watch for the other ADAG stocks as well.
Right. How would you look at Tata Steel from here on? Do you think that the sale at long product business that they are doing in UK, probably some other efforts that they are taking to rationalize, is it something which makes it a compelling buy, or at 264, 265, you still expect a lot of earnings downgrade is not yet factored in?
So clearly, I think apart from earnings downgrades, I think the weak demand scenario will continue for the steel industry in general. You're seeing realization still remaining extremely soft. You're probably looking at Tata Steel Europe's realization still remaining very, very muted over the next few quarters. Tata Steel Southeast Asia, I think that's going to report a very soft set of numbers. And even domestically, when you're talking about the Kalinganagar expansion happening in phases over the next few quarters, you're talking about volume increase happening in the domestic market, again aided by softness in the input prices. But again, I think the high cost iron inventory of 1.5 MT would play on this quarter and the next. So clearly, I think you're talking about a situation where realizations are going down. You're still having a huge amount of debt to contend with. And again, if the asset sale on the long product goes through, you're not reducing debt in a substantial manner. So clearly, our take is that the softness in the counter will continue. I think the kind of rally that we've probably seen over the past month, I think that is more or less done for Tata Steel in our opinion.
Right. Any other steel names from the large cap space? I mean, one day metals have to rally, but if one has to play, should it play via the steel name or the non-steel names? Any particular names you like into this sector?
Non-steel is something that I'll still like, Pankaj. So zinc is something that I'll still continue to prefer. They are having decent amount of volume increases. The management itself is expecting 16%, 17% volume growth. That will more or less compensate even the fall in zinc prices, lead prices that we've witnessed. So clearly, I think it's not that only steel prices have corrected and are staying low. Zinc, lead, silver have also stayed low. But the volume increase will more or less offset that. And again, I think the kind of expansion that we're probably doing, for example, Rampura Gucha, I think the stripping of mines on the underground part from the open pit is not required because they've got an open market permission to go deeper by around 40-50 meters. Similarly for Sindesar Khurd, they are expanding their capacity by 1 MMT. So clearly you're talking about volume expansion happening at the expense of realizations remaining stable. Cash-rich balance sheet, dividend yield. So I think Hindustan Zinc is something that I still prefer.
Right. A lot of people also like names like Nalco, or probably would want to play this via aluminium. Are you of the view that Nalco can do well?
So aluminum prices have crashed, Pankaj. I mean, you take a quarter-on-quarter chart, you take a month-on-month chart, aluminum prices are still keeping low. And again, I think the whole premise here for aluminum, steel, zinc is the same thing. I think the production cuts that have happened, the demand outlook there has fallen even larger. So I think the supply glut still remains on the international markets. Having said that, probably I think Nalco has cash on its balance sheet. And again, I think if you look at valuations, it looks very, very attractive. But has the cycle changed? I probably don't think so. So I think one really needs to wait and watch.
Right. Any view on gas companies? Let's start with GAIL, then I'll go on to others. Do you like that name? It's up 6% right now. It's actually been a big performer once the market started underperforming. So
it can, again, I think, and the risk reward probably would still remain a little bit of a question mark. Again, I think in terms of reward, we still might see a 8-10% up move over the next 12 months. But clearly, I think utilization levels already running high. You're probably looking at capacity expansion happening, and underutilization of pipeline is what is affecting profitability of GAIL. So I think whatever positive news was probably expected to come through has come through for GAIL. The under recoveries are no longer present on the balance sheet that it has to incur with falling prices that we have seen. But clearly, I think the core business performance in terms of cash flows coming through is not something that we are still very comfortable with. So I think a neutral view on GAIL at this point.
Right. IGL, the other one that has been doing very well. Do you think that after, I think 5-6 years, people have forgotten that name, and first time we are seeing positive news flow coming in. You think that itself, makes it a re-rating candidate?
It can, and again, I think one really needs to wait for declines on this one. I think you don't need to rush into this counter, because I think the numbers will be quite reasonable. Again, the acquisitions that it's done over the past few quarters, that is going to have it in a reasonable manner. But clearly, I think if you're talking about what is probably happening in Delhi and the regions around it, you're probably looking at IGL's volume increasing on both counts. So clearly, I think IGL on decline, is something that I look at. But again, I think I'll wait for declines onto that counter.
Right. Can you also tell us about, what would essentially be your view on a company like Reliance Industries, where crude is declining, they have other businesses, they are coming up with a new launch where they have invested a lot. How should one approach that company? Because, they are having a mix of a lot of businesses.
So clearly, once Jio is launched and when the numbers start coming through, I think you'll need two of us here, Pankaj, me and my telecom analyst as well, to probably discuss Reliance in greater detail. But having said that, probably what you're looking probably in terms of their core capex that has gone through over the past few years, they're at the end of their core capex program. Even on the telecom front, the kind of capex that they put in, yes, I think that did have an effect in how the return ratios on a consolidated basis panned out, and also the kind of increase in debt that we've probably seen. However, I think on their core business with the petco gasification and the off-gas cracker coming through, we still expect GRMs to be much higher than the other players, because the complexity of what crude it produces will still be much refined and much higher. So again, I think the GRMs will be on the higher side. Shale might be a big issue for Reliance. But again, if you take into account the entire consolidated contribution that Shale has, I think it's not great. Retail has been holding up pretty well. So I think we still maintain our positive view on the stock. And again, as I've mentioned quarter after quarter, I think it's not a quarter stock that one can discuss with. It's a year or a couple of years story that you really need to play it out. Reliance numbers will probably start getting exhibited in a much reasonable manner from FY17. So anybody has a view beyond FY17, I think Reliance is a stock that one can really look at.
Right. Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. 80 points higher for the Nifty, continues to be at the day's high, about 45 minutes into the 230 factor, and we have just seen gains getting extended, not very meaningfully, but still looking in strong. 10 to 15 minutes remaining for closing. We are taking a break, coming back with market closing on the other side.